Good afternoon, everybody. Good evening. Thank you for taking the time to join us. This is going to be an exciting webinar, but we're going to be talking about various ways that we can assist you as our member, or for you to just learn more about ways that you can uh, get some of financial goals into 2025. I'm going to come off camera so that there's no bandwidth issues. And then, please don't hesitate to any questions that you have. Please put them in the chat while I'm presenting, and then at the end we'll give you guys time to be able to ask anything you want. My name is Elton. I oversee the consumer loan department here at U.S. Senate. I've been with U.S. Senate for about 2.5 years now, and I've been in the financial services field since 2008, and most of it in the credit union world, and most of it in the consumer loan, small business arena, and home equity loan arena. So we'll go over some of those options for you. So thank you. All right, so today's agenda, we're going to cover about ways that U.S. Senate can assist you as our member with solutions to be able to do smart borrowing. And those can be important because the decisions you make can either make you or break you, as the saying goes. So we're going to assist you with learning some strategies so you can borrow smart and confident. Okay? So, as you are thinking about the end of your uh, trying to get the holidays out of the way. 2025 is right around, the corner from us. So we want to make sure that if 2024 was not the year for you in terms of finances and budgeting or ways that you can improve your life, then make sure you take the time to make that goal and priority. And we'll talk about ways so that you can reduce debt, be able to fund major projects, education expenses. So if you have any children that are sophomore, junior, even seniors, we do have options for them in terms of preparing for college. Whatever your goals might be, just make sure that you understand that U.S. Senate is a full services financial um, organization, and we can take care of you from start to finish. First, many people are aiming to reduce the debt, and a lot of that right now is credit card debt. The credit card debt uh, balance is $1.17 trillion across the entire United States. So we know that members are carrying a lot of debt. So one way that we can assist you is by reducing those high interest credit cards into lower interest rate options. So we'll go over those as well. Next, if you're planning to do any home improvements, that is something that if you want to do landscaping outside or add a bathroom or finish your basement or your attic or you're adding a room or you're just renovating, that could give you uh, some ways that you can improve your home value based on what improvements you're making. We'll have those solutions to be able to assist you, as well as if you're purchasing a car, a home, and whatnot. Okay. So we offer a range of loans designed to meet every step of your financial journey. So wherever you are in your journey, I know it can seem like you're helpless at times because I know finance and uh, economics was not something that uh, often is taught in schools nowadays. So we're like, and parents don't always, teach those tools as well now. So it's important that, you're learning and finding the best options for your, there's so much chatter and noise out there and on the internet. So you want to make sure you find the right balance that that takes care. So reducing debt is probably a priority for a lot of consumers and members. So as you're working towards that, you want to make sure you're looking at lowering your interest rates with while also simplifying payments. At U.S. Senate, we offer tailored solutions so that we can make debt repayment more manageable for you, from personal loans to credit cards with no balance transfer fees. We have the options to take care of. And then in the following slides, we'll go over what those borrowing options will be so that you can regain control of your finances and focus more on achieving your larger goals. Okay. Personal loans are a versatile and straightforward way to manage high interest debt. This is probably one of the most popular options when you're doing an unsecured loan to consolidate debt. One of the key advantages of a personal loan, it's a fixed rate, so you have a stable payment. It's unsecured, so there's no collateral, meaning you don't have to put up your home or a car or any type of other asset to be able to have this type of loan as long as you qualify for it. Another benefit is that it has a quick approval process. Uh, Unlike home equities, you can do a quick turnaround time on a personal loan, and we can either have the funds deposited into your account, or we would pay those creditors directly, depending how your approval was stipulated. And next, we're going to look at another option that's designed to help simplify debt, and that's going to be our Smart Rate Visa. We don't get a lot of traction with our Visa because there's so much out there. But this is one of the best credit cards available out there because what stands out is it has a zero balance transfer fee, which allows you to move high interest debt uh, to our card at a lower interest rate without having to pay any upfront fees. Normally, if you're doing a balance transfer with another credit card company, and they offer those teaser rates, and then now you're starting to see where the balance transfer fee is for 5%. And then after that periodic intro period of the teaser rate has ended, then your balance transfer shoots up between 25 to 30% based on what that card rate is. So with us, it's a consistent, uh, competitive, lower interest rate. And to just give you an example, if you're transferring $5,000 of credit card debt from a card with, say, 20% interest rate to our smart rate, which offers up to 50% lower rate than a national average, that could save you up to $500 in the first year of interest alone. So that $500, I know inflation is high everywhere, food, you name it, cars, insurance. So that $500 you could buy somewhere else, or you could put it into your savings account to save for a rainy day or a vacation. And also, this card offers no annual fee, no cash advances, no over the limit fees. And it makes it one of the most cost-effective options. And on top of that, it's there are no rate increases for late payment. So if you accidentally miss a payment because you're you're out of town and forgot about it, or the payment just didn't get transferred, uh, we do not do a penalty APR like most credit card companies, and your rate, stays to what is the current variable rate for their card. And if reducing the high interest credit card debt is your goal, then the smart rate Visa would make the most affordable sense for you. All right, so next we're going to talk about loans for buying a home. And this is probably one of the major milestones of an individual or a couple or a family is buying a home. So whether you're purchasing your first home or refinancing an existing property, the right loan can make all the difference in your journey to homeownership. And then when it comes to financing your dream home, we offer flexible and competitive mortgage solutions to make your home ownership a reality. Now, first, owning a home provides a foundation for long-term financial stability, which allows for you to build up potential equity and invest in your future. And as we have seen in the last 5 years, from 2019 and then during COVID, how much home prices have increased. So now, the average home price is over 350,000 in some areas, but I also saw where it's hovering around like 400,000 as well. So you can see that, if you had purchased a home in 2019, how your value has changed. And even if you purchased a home last year or the year before, the the property values are staying consistent because of the demand for home ownership. There's more people, consumers who are wanting to purchase a home, and there's not enough homes. And part of that is due to the interest rates right now. Consumers locked in those super low mortgage interest rates during the COVID times, and now the mortgage rates are more normal in that respect. But we have forgotten that 6 to 7% is a normal mortgage interest rate versus when we saw mortgage rates in the 2 to 3 range a few years ago. But we offer options that include conventional, FHA, VA. So we offer all of those options to make it a stress-free process for you. So next we'll look at how home equity loans and HELOC, which is a home equity line of credit, can help maximize the value of your current home for renovations or other financial goals. Uh, so let's explore the equity in your home to fund the important projects or improvements, whether you're making repairs, upgrades, renovations. Leveraging your equity is a smart way to access funds with competitive rates. Home equity loans, you receive so a home equity loan is a fixed rate where you receive a lump sum at the time your loan is funded. And that could be to fund one-time projects. And this makes it, a great choice for larger renovations or one large, a big ticket expense. On the other hand, we also have the home equity line of credit, or HELOC for short. This is a variable rate, and it's an open revolving line of credit. So you can dip into it whenever you need the funds up to your available limit, and or borrow as much as you need. So you only pay back what you're borrowing by advancing from your limit. So this gives you, the flexible repayment terms. And these two options provide homeowners with the tools to increase the value of their property when they're making improvements to their property that can potentially increase their value. And then next, we're going to look at how specialized loan can help homeowners with limited equity achieve similar goals. So this is our home improvement plus loan. So this is a specialized loan for homeowners who may have limited equity and but they want to make some important upgrades to their property. So whether you're improving functionality, rehabbing, or just making those essential repairs to make your house into a home that you can enjoy, this option you can borrow up to 110% of your home equity, which provides the flexibility to tackle projects even if you haven't built significant equity. It also offers a fixed rate with terms up to 180 months, ensuring that you have predictable, manageable payments. And this loan is ideal for homeowners who are looking to take it to tackle improvements but may not qualify for a traditional home equity product because they don't have sufficient value to do a traditional home equity line of credit or home equity loan. Now, so let's move to help exploring some options about education expenses and how we can assist with that. So we offer an education line of credit through Student Choice, and this is something that U.S. Senate has been offering to ensure that we are assisting our members, again, as I said, at every journey, at every step of the way. And this is designed to provide funding for your entire college career of your child or for yourself if you are in this webinar for the first time, someone who's going to be attending school with just one application. It offers flexible options so you could borrow what you need and then when you're not taking on necessary debt, you can have those repayment options that are tailored to fit your circumstances. The line of credit offers competitive rates for both undergraduate and graduate programs, which can assist in making higher education a more affordable and attainable goal for you or your family. And we also offer refinancing of student loans, which can also help manage your education related expenses more effectively. And so we're seeing a lot of students who are coming out of school with more uh, student loan debt. So we do offer not just when you're attending school, but also when you are done with school, and we could do those consolidations. And refinancing your student loans can be a game changer for your financial future. It allows for you to combine multiple student loans into one manageable payment. With our refinancing options, you can potentially lower your interest rate, which means saving money on long-term costs and freeing up your budget for other goals. I know student loans are a burden to a lot of students, and it can prevent them or keep them from uh, purchasing a home or moving because of this debt load. So consolidating may be an option to help reduce some of that stress and anxiety. And there's no prepayment penalties, so you can pay off your loan at any time. So if you want to pay it off faster, you can, and there would be no additional fees added to it. So think of refinancing as a tool to regain control of your student debt and redirect your focus towards achieving your bigger financial dreams. It could be a big vacation to Bora Bora. I know there's a special right now with a big warehouse club. I would love to go to Bora Bora. but it's not in my cards right now. So I gotta save up for it. Now that we've explored how student loans and refinancing can help manage your education related debt, we're going to shift gears literally and talk about financing of your next vehicle. So buying a car is the second most significant decision that a consumer makes because it's a big ticket item uh, after a home. So finding the right financing can make the process much smoother. We have auto loans that are designed with affordability in mind. We offer low competitive uh, interest rates to help you in having a manageable monthly payment. Our terms are up to 84 months, which gives you the option to choose the payment plan that meets your budget and timeline. We can allow up to 110% of the vehicle value to be financed, which it gives you more cushion if you don't want to pay for the taxes, tax, title, insurance, and other fees that the dealership usually adds in there. And we also have a quick pre-approval process that allows you to shop with confidence. And our applications are good for 60 days. And a lot of um, financial institutions, of 30 to 45 days is your standard pre-approval process. So with us, it's 60 days. So whether you're purchasing a new or used vehicle or refinancing an existing auto loan, USN is here to help hit the road without any financial stress. And I did see a report out yesterday where used vehicle prices are starting to creep back up again. So more than ever, finding the right balance is going to be helpful. So now let's talk about the fun side of life. So we offer leisure vehicle loans, whether you're dreaming a motorcycle, an RV, a boat, or or a leisure can be a very high-end vehicle that falls outside of our auto loan criterion guidelines. We're here to offer options designed to help make those adventures a reality. Our leisure vehicles provide competitive fixed rates. So again, you have a fixed rate with a predictable payment to meet your affordability budget options. And again, we also offer the pre-approval on our leisure loans that are good for 60 days as well. So now that we covered loans that are tailored for major milestones like purchasing a home or a vehicle, let's shift this focus to financial tools designed for flexibility. These credit options are perfect for managing unexpected expenses, covering short-term financial gaps, or just simply having a financial safety net at your fingertips. So we're going to explore those to give you that power. A personal line of credit, similar to what a home equity line of credit would look like, but it's a personal line of credit and it's unsecured, so there's no collateral tied to it. This is a reusable financial resource which allows you to access the funds whenever you need them. These lines of credit are perfect for emergencies, ongoing expenses, or if you just want to have it and you utilize it as you see fit. Here at US Senate, we offer two options to meet your needs. First, we have an easy line of credit, which is more of acts like a as a overdraft protection slash rebuilding your credit, and then the premier line of credit is our personal line of credit option that has higher limits to make those choices of funding those large expenses as well. So with both options, you gain instant access to funds and flexibility. So you can transfer funds from your personal line of credit directly into your USN um, checking account, and then you could use your card to pay for that or transfer those out to another financial institution as you see fit. Another great option would be our Smart Rewards Visa. It's a card designed for everyday flexibility with added benefits. This earns you points, whereas our Smart Rate it does not have a rewards program. Our Smart Rewards allows you to earn points on everyday purchases. It has no annual fee, no balance transfer fees, no cash advance fees, and again, no over the limit fees, and there's no rate change for a late payment or cash advances, which is a big plus because a lot of financial institutions charge for cash advances if you were to do an advance from your card. And additionally, it's a reward card, which means that you're getting something back for your spending. Every every dollar you spend can earn points for travel, gift cards, or other rewards. And periodically, we do promotional offers with our Smart Rewards, where like during the holidays, especially for Black Friday, you could have earned 10 points for every dollar you spent. Right now, in the month of December, you earn 5 points for every dollar that you spend. And then we have those throughout the year for back to school and some other uh, times as well. Now let's shift our focus to empowering you to meet your entrepreneurial goals. Here at USN, you may not know, but we also offer small business loans. We understand that small businesses are the backbone of our communities, and that is so evident because if you were to read the research, even though the big box stores, uh, make a lot of money, the small businesses actually uh, I think it's like 80% of small businesses are the backbone of community, and only 20% of the large big box stores actually are out there in the US. So think about it. We all know somebody who has a small business, and it's important that we take care of our members with all those options. And then our small business loans include term loans. So it's a perfect for one-time investments like expanding your operations or renovating your workspace. These loans come with structured repayment plans to keep your finances predictable. We also offer a business line of credit, which is ideal for managing cash flow or covering unexpected expenses. We offer a business credit card. We have equipment loans. So for the equipment loans, whether you're acquiring new vehicles, upgrading tools, or investing in technology, these loans can help keep your business competitive because we see how everything is ever evolving and shifting at a rapid pace. So you want to make sure, as a business homeowner, you are always staying ahead of the curve. And when it comes to taking out a loan, the importance of choosing the right one cannot be overstated. Uh, the right loan can help you achieve your financial goals, whether you're buying a house, you're starting a business, or consolidating debt. Uh, if you end up picking the wrong loan, that could lead to financial hardship or ruin because I've seen many people, who do short-term loans through payday lenders, and they fall into that trap, and they'll never be able to pay off that payday lender because the rate is so astronomical that it's what they're paying is just the interest, and they haven't even touched the principal. So that's one example of a financial mistake that can definitely set you back. And there were so many types of loans available, and also too, it can be overwhelming. There's so many options available out there. You want to make sure that you read the terms and conditions uh, of what you're choosing because they vary from company to company. Uh, just because sometimes they just want to offer you like a teaser rate, but if you read the fine print, there could be prepayment penalties. There could be a funding fee. So you want to make sure you read all of those tiny terms and conditions so you understand your rights. Because once you sign, and you have agreed to those. And to help you choose the right loan, here are some key factors to consider. Interest rate, is the interest rate fixed or is it variable? If you miss a payment, can your interest rate change? Um, if you were to do a $20,000 loan with a 5% interest rate over 5 years, the cost of that would be $3,322 in interest over the life of that loan. Whereas if you chose a loan with the same loan amount at 4%, then you'd be saving about $640 of interest over the life of that loan. So you can put that towards something else. Fees and charges. So you want to make sure there's no origination fees, application fees, prepayment penalties, late fees, as these can add up quickly. And if you were trying to, earn points for that vacation, but then it's getting you're getting clobbered with those types of fees and penalties, and your points lose a value quickly when you're having to pay them again. Loan term. Yeah, the length of your loan can have a big impact on the monthly payment. The shorter the loan term, the less interest you're going to be paying. The longer your loan term, the more interest you end up paying over the life of that loan. So a 60-month and a 72-month loan can make a big difference. Perfect example would be a home loan. So if you choose a 15-year loan versus the 30-year loan, your payment is not going to double by going from a 30-year to a 15-year. What's happening is your payment will go up, but you're also saving so much interest that you're going to be paying less for your house over that 15-year versus that 30-year loan. And then collateral, some loans, such as mortgages and auto loans, are secured by collateral. So if you fail to repay, then that collateral can be repossessed. But secured loans also have lower interest rates than unsecured loans. But you have a risk of losing the collateral if you don't make your payment. So that's something to also think about. And when it comes to applying for credit, your credit score and history play a pivotal role. Uh, I always say that your interest rate determines what um, your FICO score determines what your interest rate is going to be. Your FICO score is not going to determine whether you're going to get approved or declined or counteroffered for a loan. Oftentimes, there's this misconception that somebody who has excellent credit, that would be 800 or above, or someone who has good credit, that would be 700 or above, thinks, because they have a 700 credit score or 800 credit score, they'll automatically be approved for every single loan that they apply. But no, because there's so many factors that go into that approval. There's your how much debt you have in relation to your income. Do you have a lot of utilization of credit? So if you have a lot of open revolving credit, are you using more than 35% of your available balances? How you're making your payments? Have you had poor payment history in the last 12 to 24 months? Do you have unpaid collections, charge-off, repossessions, judgments that are showing on there? All of those can affect your uh, ability to qualify. But your FICO determines what your rate is going to be because most financial institutions are what they call risk-based pricing because your credit score determines what your rate is going to be. And as I said, your credit score is shaped by several factors. Well, payment history is one of them. As I said, are you paying on time or do you have missed payments here and there? The amount of credit you're using or the mix of credit you're using as well too. Do you have a lot of revolving credit card debt? Do you have a lot of unsecured debt or do you have a mixture of secured debt that can be either a home equity, auto loan, recreational or a home loan? And then the length of credit also affects your credit history. So do you have a lot of newer accounts or do you have established credit accounts? And then also it's important that you review your credit report. You are allowed three free credit reports per year. So you get one from Equifax, one from Experian, one from TransUnion. And don't worry about buying the FICO score. Your history is what's important, and that's what's free. And that's available at annualcreditreport.com. And you want to make sure that you're at least doing this every year to make sure that there's no discrepancies so that you can file any disputes directly with the credit bureau to correct any inaccuracies versus trying to go to XYZ bank and say, well, you reported me late, but I actually have been paying on time. If you file through the credit report, then that sets in some protections for you as a consumer where the XYZ bank has to follow. They have to do a full investigation and then they have to report back on that investigation. So you're going through proper channels. And also take time to evaluate your credit score both and history before you're applying for a loan. Oftentimes people assume their credit is good and but they don't know what it looks like. So they're assuming that they should have a 800 credit score and then it comes back at 650 and they're surprised by it. So it's always important, especially if you're gonna do like a big ticket purchase like a home or a vehicle, what your credit score is so that you can get the best available interest rates. If your credit score is not up to par, then you can take steps before you make those big purchase items to fix and improve your score. And as we discussed, the importance of understanding your credit and evaluating financial standing is crucial. So, applying this knowledge to make informed borrowing decisions is one of the things that you should be uh, making a part of your analysis each and every time. And by adopting these smart borrowing strategies, you can not only meet your immediate financial goals and needs, but you also build a strong foundation for your future financial health. And so we're going to explore some practical and effective strategies for borrowing responsibly and maximizing the benefits of those loans that would be available to you. So we're going to dive into some of the key tips for responsible borrowing. So number one, borrow only what you need. I know it can be tempting that you're pre-approved for an X amount, but think about it, like, how is that going to play into your budget? Budget is like the big and the elephant in the room that we as consumers don't always adhere to because credit's available and we could just pay it on time each month. But borrowing within your means ensures that you'll have manageable repayment and you're minimizing your financial stress. You can qualify for a $500,000 home loan, but it does not mean that you can afford a $500,000 home loan because there's more to it than just the monthly payment, which is the principal and interest. There's the escrow, that's taxes, insurance. If there's a homeowners uh, homeowner HOA on there, so you have to factor that into repairs that you may not anticipate. So there's a lot of things to homeownership. So like if you pre-approve for a $500,000 home, maybe you want to just borrow 400,000 because you don't want a $500,000 loan payment. Understanding the terms. So before you sign anything, make sure you have read the the terms and conditions. You understand that big square box that has the rate. It has the interest. So it has the interest rate. It has how much interest you're going to be paying over the life of the loan, the total number of payments that you're going to be making. You understand uh, how many payments you're making, so your loan term and what your monthly payment is going to be as well. And and then also plan for prepayment. So, you can say, okay, I want a 5-year loan, but if you want to pay it off in 3 or 4 years, then you can have a flexible payment of a 5-year loan, but you can goal it so that you're making the payment as if it's a 3-year loan or a 4-year loan, as an example. And then take the time to shop around and evaluate the different loan options. At USN, we offer a range of loans designed to meet all of your various needs. Um, but I implore everybody to just shop around to make sure that you find the best rates and terms and conditions that are available to you. And we're always here, to assist you. And then make sure you're keeping your debt manageable. It's easy to tack on debt because everybody's offering you credit, but that does not mean that you should get it. Just because somebody's offering you credit, but you don't need it, then you should hold off on it. So make sure you're carrying the right mix of debt. Make sure the debt that you're carrying, you're able to afford. And then if it's getting out of control, then you know take some time to retool your strategies to reduce that overall balance. And then also making sure that you're leveraging us uh, as your resource. We are here to help. We are a credit union, people helping people. Our goal is to help you succeed. Our goal is to have you realize your financial goals and dreams. So we have the financial tools and the advisors for the various loan options that we offer to guide you through the borrowing process. We are the experts, so that's why you come to us for us to give you the best financial advice. And by following these tips, you can borrow more confidently to meet your goals and protect your financial well-being while uh, while being a responsible consumer and being proactive to make sure that you're making rational, intentional decisions. And one way that we help our members to be protected is um, is through our debt shield. Our debt shield is is not just about protection, but it's also about being proactive and financially savvy. You this allows you to reduce the financial stress. Debt shield acts as a safety net during unforeseen life events, such as a job loss or illness or death. It's not a matter of if it's going to happen, it's when it's going to happen. And one in two consumers, one in two Americans will face some sort of illness in their lifetime where they will be out of work, and having debt protection for disability as an option, or involuntary unemployment or death can help mitigate um, those unknowns. And protecting your credit, maintaining a strong credit score is the cornerstone of smart borrowing. Why I say that is because your credit score is the interest that you're going to pay. So the higher the credit score, the lower the interest rates and the lower cost that you're going to have when you're borrowing money. The lower your credit score, the higher the interest rates and the higher the cost of borrowing money. So those two work in tandem. And also, too, Debt Shield ensures that your loan payments are made on time. It safeguards not just your credit score, but also keeps you financially healthy. And it just gives you the peace of mind of like when something happens, I'm good. I don't have to stress because debt protection comes in and covers the gaps that your employer does not cover with your disability. Most disability plans at work cover between 60 to 66.67 percent of one salary. How are you going to make that 34 to 40% gap in income that you now don't have while you're out ill and trying to recover? So that's where Death Shield can come in and protect you as well. And then let's wrap up by talking about why USN is a smart choice for your financial journey. You know, we offer competitive rates as a credit union. Our goal is to have low low interest rates, low to no fees, and we pay higher deposit rates. Because we are a not-for-profit, our goal is to take care of you as our member. So we try to offer the best possible uh, loan products at the most competitive rates available. And there's no hidden fees. We are transparent in what we do, what we have. It's prominently on our disclosures. It's prominently on our website. It's prominently when you go to the branch, when you call in. Uh, like there's no gotchas because that's the transparency that we provide. And we offer, that expert guidance. We're here to be an advisor for you. We're here to be part of our communities that we serve, and we serve communities in 50 states because we have members in all 50 states that are members with us and that bank with us and that borrow from us. So we are in every step of the corner. And choosing US Senate is not just about financial products, but it's about the partnership that you build on through trust, value, and the shared commitment to your financial success. And together, we can turn your financial goals into reality. And you can reach us at 800-374-2758, and you can speak to one of our loan experts, whether you're wanting to apply for a consumer loan or a home equity loan. Just choosing the right prompts will guide you to the best available expert. And then, here at US Senate, our commitment extends beyond providing financial solutions. As I indicated, we're dedicated to helping you achieve your goals and for you to thrive in 2025 and beyond. So thank you for joining us today. So now is going to be a perfect time to share your questions or specific financial goals, whether you're looking for guidance or a particular loan product or simply just want to explore your options. we could assist with those.
Hey, Elton, thank you so much for the presentation. And also, before we run out of time, I also want to thank you for being part of the panel for this 2024. So we truly appreciate your expertise and so much knowledge that you have in the lending field. So thank you from everyone here from the panel here at the United States Center for Credit Union. So we appreciate you. And again, that was a wonderful presentation. Eddie, Andrea, what questions do we have on the Q&A and on the chat that you guys want to read for Elton?
Okay, so the first question that we have is what is rate on smart, what's the rate on the smart visa? What about a new purchase or purchases? What is the introductory rate?
Yeah, so that is a great question. Currently, our smart rate visa, it's a variable rate. It's 13%. So that's tied to the Fed funds rate. So as the Fed adjusts rates, the visa is going to adjust as well. So right now, the Fed is done increasing rates, and they're starting to lower rates. So our smart rate card is also has been adjusting lower to that. So and then for purchases, you have the standard 25-day statement period, to pay off your purchases without accruing any interest. So if you pay by the statement by the statement date, due date, then you'll accrue no interest. And then any purchases or balances that move past your due date, then those will accrue at the current variable rate.
Thank you. And the next question is I'm looking for a HELOC for my home loan.
Great. So we do have so we do have those options for you, and I believe we're going to send out a link for those for the home equity or any specific product that our our members in this webinar are requesting. So we do have those options available for you guys, and you can either apply online or you can call in or during our business hours, or you can visit a branch if you are local in the Alexandria area to speak with a branch representative.
Yeah, and then I believe this might be the last question. I don't know. Eddie might see one that I don't have. Is I'm on a fixed income and I do not own anything on my home and I want to buy a rental home.
So we do have our mortgage team that can assist you with those options to go over with you. So so we can Carrie can provide that information to the member, and they can reach out to Jeremy or Ken for further assistance with those mortgage related specific questions.
One thing I did wanted to mention, and thank you, Elton, for answering these questions. You have so much knowledge, and as Milton was saying, we're very grateful you're part of this webinar team. He was talking about the Visa Smart rate that we currently have, but I believe Milton, there's a cap on the interest rates that we can do for our loans in the credit union, correct? Can you remind us what that number is?
Absolutely, Eddie. That's a great point, and I just know, and I know it goes back kind of tied to one of the questions that was asked about whether or not we offer any intro rate. And for us, or intro or a rate that we offer right now on the Smart Rewards is 13%. And the most we will ever charge you on any of the loan products that we offer here is actually it's capped at 18%. If you look at the national average, Eddie, I mean Carrie, I'm sorry. will tell you that right now that it's in the mid to high 20s right now. I mean, that's a crazy annual percentage rate that our members are paying out there, without having the knowledge of and low interest rate that we get to offer everyone here at the credit union. So please, take advantage. Give us a call. We're here to answer any questions, any concerns that you have. If you call the 1-800 number, press option 7, you can either say Kim's name or my name, and we will be more than happy to chat with you, or shoot us a note. Carrie will send a copy of this presentation, and again, we'll be more than happy to answer any of your questions or concern. And with that being said, the one thing I want to say before we end up this webinar is we would like to invite you to our very last webinar of 2024, as we get ready to roll into 2025. So next Wednesday is going to be the last one for the season 2, right, Eddie? And the topic of it is financial planning for 2025, right? I mean, it goes in line. 10 key resolutions that you should look and try to implement as we start the 2025 year. So again, thank you all for being with us this evening. We hope you found this information helpful. Our wonderful team here is very grateful that you had an opportunity to join. And again, Elton, thank you so much. And I think Carrie, you wanna come up here? Go ahead.
I see one more question. Elton, do you know the current rate for HELOC?
The current HELOCs, they are at 8%, and that is a variable rate as well.
Thank you.
And I was going to add to the HELOC, just the HELOC, it is an amazing product, but depending on the project, depending on what you want to do, you might want to explore perhaps a home equity loan instead of a home equity line of credit. The difference between the two, one has a fixed rate, and the other one, it is going to be variable. However, one of the perks on the home equity line is that it is variable, but you only pay interest on the amount that you borrow. So that is a couple of things that you have to weigh in when it comes to deciding which option works best for you. So if what you have in mind is to have money as an emergency in case something happens, then the home equity line of credit might be the best option. But if you have a fixed project that you know exactly how much you need, and then that you're gonna spend regardless, and don't want to have and be surprised that your rate is fluctuating and going up and down, then you might want to explore the home equity loan. So again, give us a call. We are here to answer any of your questions and concerns. We can do an in-depth analysis and perhaps provide you some guidance and advice as to what would be the best option for you. With that being said, Elton, again, thank you all so much. The number again, if you want to call us, is a 1-800-374-2758. Thank you, Carrie, for putting it in there. And with that, we want to thank you, our amazing panel, as always. We know you all started the day early today. And we look forward to see you one last time next Wednesday for that final episode of season 2. You'll have a wonderful evening. We'll see you next week.
Thank you.